Hey everyone, welcome back. Today we're diving into some massive news about OpenAI, the company behind ChatGPT, which has just raised $6.6 billion. This move is setting the stage for OpenAI to potentially reach a valuation of $157 billion. We'll break down what this means for the AI industry, what the market reaction has been, and what OpenAI is planning next. So sit tight and let's get into it. Let's start with summary on stock. To kick things off, let's talk about the highlights of this funding round. OpenAI has pulled in $6.6 billion from big names, including Microsoft, Nvidia, Thrive Capital, and Khosla Ventures. This influx of cash positions the company to remain one of the most valuable private companies in the world. Some new faces, like SoftBank and Abu Dhabi's MGX, also joined the funding round, signaling widespread interest and trust in the future of AI. The news also reveals that Apple was in discussions to invest in OpenAI, but it decided to stay out of the game for now. So, what does this funding really mean for OpenAI's stock value? While OpenAI isn't publicly traded yet, this influx could be a game changer if it heads for an IPO. Analysts are expecting the valuation to hit around $157 billion, which would place it among the top private tech giants. If market is positive or negative, now on to the market mood. Is this news being viewed positively or negatively? Overall, it seems positive, but there's a mix of excitement and caution. Why positive? Well, this funding comes at a time when OpenAI is showing unprecedented growth. It's generating around $3.6 billion in revenue this year, with major plans for next year. There's also excitement around their focus on artificial general intelligence, AGI, a big leap in AI that many investors believe could revolutionize industries. However, the market isn't without its caution flags. OpenAI is still experiencing significant losses, over $5 billion this year, despite its revenue growth. Some investors are wary about whether OpenAI can turn those losses into profits and if they can keep up the pace of growth. Next update from the company. So, what's next for OpenAI? According to the latest updates, the company is restructuring. One key element of this is their move towards becoming a more formal for-profit company. They're also offering liquidity for employees through a buyback offer, giving some insight into their internal changes. The departure of their longtime Chief Technology Officer, Mira Murati, raised a few eyebrows, but the company continues to push forward under the leadership of CEO Sam Altman. Investors are keeping a close watch on the restructuring process, especially as it might allow OpenAI to offer more equity to its senior leadership and employees. What they're planning to do. What's OpenAI planning next? As they move forward, their plans revolve around two major areas: commercialization and artificial general intelligence, AGI. They've already shown the world how popular ChatGPT has become, amassing 250 million weekly active users. Now, they're laser-focused on scaling those numbers and pushing their AI technologies into more industries. Their revenue projections for next year are sky-high, with expectations of hitting $11.6 billion. To make that happen, they're planning major product developments, ramping up their AI models, and expanding partnerships, especially with big players like Microsoft, which is already deeply involved in their ecosystem. Let's talk about stock, going up or down. Let's talk about the stock's potential direction. Although OpenAI isn't publicly traded, its value is being carefully monitored. Based on the company's revenue projections, there's a strong chance the valuation could continue to rise, potentially even higher than the $157 billion mark, especially if they hit their aggressive revenue targets next year. That said, with high growth also comes risk. If OpenAI can't manage its losses, or if the restructuring takes longer than expected, there could be downward pressure on its future stock price if it does go public. But with strong investor backing and commercial interest, the upside potential is significant, particularly if AGI becomes a reality sooner than later. What are the risks? Every high-growth company comes with its risks, and OpenAI is no exception. The biggest one? Financial sustainability. OpenAI is currently running at a loss, with $5 billion in red ink, despite its growing revenue. Managing this financial situation will be crucial. Additionally, the corporate restructuring poses its own risks. If the transition to a for-profit model doesn't go smoothly, or if the nonprofit board doesn't relinquish control, there could be challenges ahead. Investors have negotiated terms to claw back their capital if the restructuring isn't completed within 2 years, signaling that they're well aware of the risks. Finally, competition is heating up. Companies like Google and Meta are pouring resources into AI, and it'll be a race to see who can develop the most innovative technologies. In conclusion, OpenAI's $6.6 billion funding round marks a monumental moment for the company. They're setting themselves up for massive growth, with bold revenue goals and a vision for AGI that could reshape the entire tech landscape. While the market is largely optimistic, there are real challenges: financial losses, competition, and restructuring risks. As OpenAI navigates these waters, the potential for success is enormous. But as with any major tech company, it's not without its hurdles. Whether you're an investor or just an AI enthusiast, OpenAI is one to watch closely.